Welcome back to Wealth Wednesday. This is Bryant Stone, Chief Investment Officer of Polimeni Tax and Financial Group. Continuing from last week's episode, what is an ETF? Once again, we've been trying to tie a lot of these Wealth Wednesdays together, so that it's flowing, it's making sense to you. We've talked about, different type of investment accounts. Now we're transitioning into different types of investments that can go inside these investment accounts. Once again, we talked about what's an ETF last week. This week, we're going to talk about what is a stock. A stock, very simply, is also known as equity, is a security that represents ownership of a fraction of a corporation. So if you do have a stock, you're considered a shareholder. And units of stock are also called shares. So if you have 10 stocks, 10 shares, same thing, same type of terminology, okay? Stocks are bought and sold predominantly on stock exchanges. They can also be purchased in private sales as well. And typically stocks are the foundation of any type of investor's portfolio, like the foundation of it, okay? Now, digging a little deeper into understanding stocks, corporations that issue stocks are typically doing that to raise funds to operate their businesses. So kind of giving an example right now, the Lambeau Field, they're currently raising stocks so they can make some expansions on the Lambeau Field Stadium, okay? And once you purchase a stock, once again, you're considered a shareholder. And just to kind of give you an example, let's say that a corporation has 1,000 shares that are out there, and you own 100 of them. Okay, so if you own 100 of 1,000 shares that are outstanding, what would happen is basically you're 10% of the company. You basically have 10% ownership in that company's assets and earnings. Okay, so if you like different companies out there, things that you purchase and buy, maybe that's something that you may consider being some type of owner in that company, right? Now, differentiating the different types of stocks and the two type of main stocks that are out there. One is common stock, which typically entitles the owner to vote at shareholders' meetings. They can receive dividends, and dividends are typically going to be paid out if the corporation has excess earnings. They may pay dividends to the common stockholders. Another type of stock that's out there is preferred stock. Preferred stockholders typically don't have voting rights, but they do have higher claim on the assets and earnings than common stockholders. So to give an example, if the company was to go bankrupt, if the company was to go under for whatever reason, preferred stockholders would have claim over common stockholders. So it's important that you know those differences as far as the different types of stocks. And typically, guys, like always, consult with your financial advisor, consult with your tax professional. Now, a quick fun fact, guys, the first common stock ever issued was by a Dutch East India Company in 1602. So it just kind of shows you how long the stocks have been out there. Once again, they're typically going to be your foundation in any portfolio. Once again, before getting into stock investing, make sure you consult with your financial advisor, your tax professional, so that way you're making the correct decisions. And as always, guys, appreciate you guys coming on. We'll see you again next week. Thank you.